Welcome to America's Heroes Group.
And welcome back to America's Heroes Group. On this section of our discussion, we have a roundtable with community outreach. June is LGBTQ month, LGBTQ plus month. We just need more letters than that. Pride month. Today is Saturday, June 25th, 2022. Today is also the 75th anniversary of Anne Frank's diary, the release of Anne Frank's diary. I'm Sean Claiborne, the co-host. Our host is Cliff Kelley. The executive producer is Glenda Smith. Our digital media producer is Ivan Ortega of Scouts Honor Productions. And we have our panelist on the line, Mr. David Milansec. He's a CPA and president and founder of Katz Milansec, Inc., and a military family member. And we want to talk about some tax issues, tax problems, tax planning, and also veterans discounts, things we all can use, particularly as veterans. And if you're a family member of a veteran, you'd want to pass this on to them as well, because we're going to give some good information out. How you doing, David?
Oh, I'm doing well. Thanks for having me, guys. Thanks for having me on, Cliff. I just wanted to say Cliff's personal tax accountant as well, and then also that as you mentioned, I do have family that is military. My grandfather served in World War II, and then my wife's father was I believe, Korea-era Navy. So we definitely value our veterans, and we do offer a veterans discount in our firm. It's Katz Milansec. You're gonna find us on the web at katzmilansec.com. That's KATZMILANEC.com. Or you can give us a call at 708-914-8220. And that veterans discount, if we don't have anything else that we can offer you as a discount, we're going to give you 10% off the top.
I appreciate you mentioning that your family members were veterans. I'm going to also say your last name correctly, Milansec. I think we spelled it wrong on our sheet here. Milansec. So
Milansec.
we're doing things on our taxes. What are some of the things we need to watch out for?
So one of the big things that I see, first off, you got a lot of people who they just get scared of it for a while, and they just decide to stop filing, and then it mounts and mounts and mounts, and now you've got 10 years you haven't filed. We can help you take care of that. We can get you a power of attorney. We can get all the documents. We can get that resolved for you. That's definitely something we can do. We go in, we get what's called wage and income transcripts. You don't even have to have your tax documents. We can help you prepare your back taxes. And we can and get it done for you, get you the best rate possible, get everything settled for you so that way you can move on with your life and not have that big 800-pound gorilla hanging over your shoulder. And another thing that I've noticed that a lot of people there's this whole new gig economy, right? Mm-hmm. So a lot of people nowadays, their businesses, they don't even know their businesses. So it really behooves you if you're driving Uber, if you're driving Instacart, you're doing Lyft. Any of these gig jobs where you're picking up, where you're getting an app and you're picking up like rides or whatever the case may be, if you are doing that and you're using your Social Security number, you're paying something called self-employment tax, which means on top of your income tax, you're paying an additional tax that has to be paid every year on your tax return.
Now, what's one thing that I noticed, just to interrupt you for 1 second. The one thing I noticed, too, a lot of veterans and a lot of people that are service members have side gigs, because sometimes some occupations have a lot of downtime. And not just people in the military, but first responders, firemen, police officers have a lot of second jobs or gigs that they do to make money. And a lot of times they're not reporting it correctly.
Yeah, absolutely. So you're not getting all your expenses if you're not keeping track of your records correctly. And then, like I was saying, you're paying this thing called self-employment tax. It's an additional tax. I can reduce that self-employment tax to zero.
How do you do that?
And it's completely legal. So what we do is we take a look at your situation, and we decide if it's going to be beneficial for you to incorporate. If you incorporate, we're going to we're going to take you. We're going to fill out all the paperwork for you, get you registered with the Secretary of State, all that good stuff. But then on top of that, we are going to give you the tax advantage status of being a small business corporation. So we're going to file what's called a Form 2553 for your incorporation that's going to allow you to not have to pay that self-employment tax, and also you're not going to pay a corporate level tax. The only tax you're paying at that point is your income tax. And I have a personal guarantee that if you come to my office and I recommend that you incorporate and you don't save at least the amount of money that I charge you to incorporate in the first year on your taxes, I will refund you the difference. So if you're interested in that, give me a call at 708-914-8220 or visit our website at katzmilanec.com, KATZMILANEC.com.
One thing that people, when they start businesses, whether they're side hustles or gig economy type employees, or whether they're just getting incorporated for the first time, the big question I get a lot is whether or not they should be an S corp or an LLC. So what's the advantages or disadvantages of one or the other? And also, when does that happen? Does that happen when you incorporate, or does that happen when you actually start doing your taxes?
So that first question is actually a very common misconception. Okay, so let me explain. LLC is a legal entity type. Okay, S corporation is a tax status. So I can actually, if you really want it, I don't recommend going this route, but if you really want it, I can make you an LLC, give you articles of organization, all that, and I can elect the S corporation tax status for your LLC. Now that said, for most people, if they're going to be if they're going to be sole shareholders, they're going to be the only one in the company, everything like that, there's no legal benefit really to an LLC at that point. At that point, it's better in most cases to just incorporate and get the S corporation election.
That makes a lot of
LLC,
sense.
Yeah, and so to go back to the other question there, yes, LLCs and corporations, you have to decide that when you form the entity. That's the first step, because you're either going to file articles of organization with the Secretary of State, which is going to give you an LLC, or you're going to file articles of incorporation with the Secretary of State, which is going to give you a corporation. And at that point, that's when you can elect your tax status. You actually have 75 days from the date of formation to elect S corporation tax status. You can do that as an LLC. You can do that as a corporation. I recommend a corporation for most people. And to be quite honest with you, about the only exception to that I have is real estate investing, where I have a completely different strategy, and it involves LLCs heavily. But for most people, when they're earning ordinary income, that you're gonna incorporate, you're gonna elect that S corporation tax status.
So what are the benefits, particularly for those that are in real estate or have high liabilities, or they're worried about getting sued? What's the benefits of having an LLC? And in practice, how does that protect you?
So I actually recommend a multiple LLC strategy. To be quite honest, if series LLCs were more tested, I would probably recommend the series LLC. But I don't like the fact that series LLCs have like zero precedent in court currently. So
explain that. Back up a little bit. Explain series LLC.
So a series LLC is where you make one LLC, and then you can file several different series under it, and each series is its own business. So, like, I could have Katz Milansec if I wanted to have it in a series LLC. I could have Katz Milansec, and then that would be one series, and then I could have an ice cream store, and that could be another series, and then I could have a rental property, and that could be another series. And I could just make unlimited amount of series The problem with that is, the biggest problem is that, that you have to make sure.
Ask this one question. Does that mean you have a different tax ID numbers for each business, or is it all under one tax ID
And that's
number?
exactly where I was about to go. Okay. You have to make sure for each series you're getting a different EIN and you're getting different bank accounts and everything like that, because otherwise the problem that you're going to run into is that even if you make a series LLC, if you have all of it under just the main LLC, then it's kind of like it's kind of like having all your. It's like if you had a corporation, but then all your money goes into your personal account. Really, your corporation doesn't really exist for any reason but on paper at that point.
Right, and that seems like a really cool fund if you don't have separate bank accounts.
Yeah, exactly. So you have to be really careful with that stuff. And even then, it's not tested in court, so I'm not really a big fan of it.
So how long has this been around?
It's only been around for about, I want to say 5-10 years, something in that range. Okay. It's a very new concept. It's a neat concept, but again, not very tested. So what I actually recommend for LLC strategy, it depends on your risk protection. I'm sorry, not risk tolerance. It depends on your risk tolerance in terms of if you're investing in real estate. If you are investing in real estate, if you are a very intolerant of risk person, which I know most people are, I go so far as to say hold each property in a separate LLC. And here's why. That's going to silo off each property from each other. So if I have 10 properties and I have 10 different LLCs holding those properties, then if property 1 comes into risk because somebody slips and falls or whatever, properties 2 through 10 are still safe, and they're not going to be challenged or anything like that. And you can actually even go a little bit further with that by having a property management company that you sign all your contracts with, and that property management company, you would want to be an S corporation, because again, that's going to make ordinary income as opposed to rental income, which is the big distinction as to why you can use LLCs with the real estate and you can't with a regular business. And when you have that property management company, one of the benefits you can do is you can assign 10% of the rents or even 15% of the rents to the property management company, and then you can write off expenses from the property management company to reduce that amount that you're getting as reportable income, as net income that has to be taxed. And then on top of that, the amount that you're assigning to the property management company is revenue. That is then deductible from each property. So if each property is paying 15% property management fee, that's the deduction of 15% of the rent across the board for all your properties.
Wow. Now, one thing I always wanted to get into, and this is the thing, especially with accountants. Again, I ask this question a lot when people give advice with taxes, because when people oftentimes write off a lot of stuff, and they have all these deductions, I think it's important to always keep in mind if you're going to try to borrow money from a bank, because if you're not profitable, because you write off you show you don't have any income at the end of the year. What is that process like for you? What was that?
I said the double-edged sword of write-offs.
Yeah. So do you encourage people to think about? I always say think about 2 years in advance what you want to do as far as getting funding. If you're going to borrow money, or if you're going to from a bank or from a lender, making sure that you put your best foot forward. Is it easy to go back and amend taxes? And what's the trap door to that, if there is one? If you say, okay, I need to apply for a loan, but I got denied because it shows I've been losing money for the last 3 years, so I can't get a business loan.
So especially right now, it is incredibly difficult to go back and amend returns. The IRS is backlogged like crazy. I have one client right now, still to this day. I filed a 2017 amended return for them in 2019. We still have not gotten the return processed. It's still in processing with the IRS.
Wow.
So it's very frustrating, but it's a fact of life currently. The IRS is backlogged, and if you want to amend a return, it's going to take forever for it to process. So that being said, I do like the point that you touched on there because it's absolutely something I preach. I tell people there's an old saying: if you fail to plan, you plan to fail. And so tax planning is no different than any other kind of planning in that respect. So I often tell business owners when I meet with them, what if I told you I could get you a refund every year for the rest of your life? And they look at me like I have 5 heads. And the reason I say that is because I can actually demonstrate that. I have a client that they are between their business profit and their wages that they pay themselves. They report over $1 million every year in taxable income, okay? Mm-hmm. And every year for the last 6 years at least, I've gotten that client a $100,000 or more refund. And the reason for that is because they like to get that big refund check at the end of the year. Mm-hmm. So what we do is we sit down every quarter and we analyze their profits and we say, okay, based on this, we think you need to pay in this amount. And we do that on a quarterly basis. We sit down, we do that. And quite frankly, for that client in particular, I overestimate what their profit's going to be, and I underestimate on the deduction side and everything like that, because at the end of the day, they like to get that big refund check, and they also don't. And that particular client has not paid a fourth quarter estimated tax payment in the last 6 years either, because they like to have it done by the end of the year. So
it's just kind of smart planning during the process, during your business cycle, during a year. Of knowing when to pay yourself, when not to pay yourself, what to give to the IRS, what not to give to the IRS.
Exactly. And so if you want to be at break even, you don't have a balance due, you don't have a refund, we can get you there. If you want to be at a $10,000 refund, whatever the case may be, it all depends on how you want to play it. But however you want to play it, we can set you up and we can make it work for you. So if that's something, sorry,
I got to do a little mini rant. That's just the thing. I always feel like small business owners in the United States always get screwed over. Nothing works for small business owners. Big corporations, you're okay. Small business owners pay way too much in taxes, and every time they try to get ahead, it's like there's always something pulling them back down. So you need people like you to try to just minimize the damage.
Exactly, and that's exactly what I was going to say. I see a lot of small business owners that do pay way too much in taxes. One of the things they pay too much in taxes is self-employment tax. That same client that I mentioned to you, they have an LLC. When they came to me, I converted them to an S corporation. They were paying $35,000 of self-employment tax every year, and I completely eliminated that number for them. Wow, same as I can do for anyone else out there. It's something that's completely open and available to everyone. If you're interested in any of this, remember, please give us a call, 708-914-8220, or visit us at katzmilanec.com, KATZMILANEC.com.
So for people that are saving for retirement and are putting money aside, there's a couple of tax credits that people don't know about. So you can actually get a tax credit for saving for retirement up to, I think, $2,000 per person.
That does exist, but that's not. It's income based and it's very limited. So you have to have a very low income to qualify for that. But the good news for business owners, is that for business owners, you can set up a self-employed retirement plan. Whether that's a SEP 401k or a SEP IRA, anything like that. I typically recommend self-directed because it allows you to invest in products that you can't normally get on the market. Mm-hmm. But whatever you're interested in setting up, you set it up as a self-employed plan. You can contribute up to 25% of the profits that you make up to a maximum of $52,000. So exactly. So it's 25% off the top of whatever you make. So if you make $200,000, Well, now we can contribute $50,000 to that retirement plan. Now you only pay taxes on $150,000.
And the money's still yours. That's the thing. You didn't give it to the
Exactly.
IRS.
Money's still yours at the end of the day. It's just you can't touch it for a little while. That's all.
Dave, one more time, give us your contact information before we go.
Absolutely. We are Katz Milansec. Visit us at katzmilansec.com. That's KATZMILANEC.com. And our number is 708-914-8220. Feel free to set an appointment with us. If you mention Cliff Kelley, you'll get a free consultation.
Dave Milansec of Katz Milansec Incorporated. This is America's Heroes Group. We'll be right back.